Hello, welcome back to my channel. Let's recall last week's video on getting infinity returns on your real estate investment. It's very nice to have monthly cash flow without any of your money invested because you have the knowledge to buy it right and know your numbers before making an acquisition. Let me share with you some options that you can think about on how to scale your real estate portfolio to the next level. If this is your first time visiting my channel, please subscribe and turn on the notification bell. This channel is about investing in cash flow real estate, achieve your financial independence, and make an impact. My name is Korianne and I am a real estate investor since 2001. I achieved my financial independence when I was 35 years old after consistently investing in cash flow properties over 8 years. As you remember from the previous video, you may recall these numbers. The market value in 2010 is $110,000. Monthly rent of $1,200 and the loan amount of $82,500. The instant equity was $27,500, and after refinancing, I took all of my money out of the project and still ended up with a surplus checks of $2,420. I specifically picked this property so I can show you the actual numbers over time. As of 2022, the market value of this property increased to $270,000 with a rental income of $1,800 per month, while the outstanding loan balance decreased to $69,000 plus. After 12 years, the outstanding loan amount went down by nearly $13,000 and the total equity went up to $200,083. The best part was I got an infinity return and over $200,000 added to my net worth from this one project. Let's think about this for a minute. If you purchased 10 of these properties in 2010, you would now have $2 million added to your net worth. The good news is that there are wholesale property in any economic cycles. You can learn how to buy wholesale properties so you can use the skills to build your long-term wealth. In this video, I will show you how you can scale up your real estate portfolio. So let's say you now own a property. There are two options. Option number one is to do nothing, or other words, just let the property continue to rise on its own. Or option number two is do the cash out refinance and reinvest that money. Let's look at the economics of these two options. Let's first take a look at the return on the option number one by continuing to let the property rise. You have seen the set of numbers on the left before. On the right, we are trying to figure out our annual cash flow with the rent of $1,800 per month. When we work out the monthly expenses, I want to emphasize again the importance of budgeting for vacancy and maintenance. I typically budget 7 to 10% of the monthly rent for both of these allowances. This yields an annual cash flow of $7,872 in this property. With the total equity in the property in the amount of $200,000, this gives us a cash-on-cash return of 3.9%. In order to accelerate the growth of our money, I continue to monitor our return on the equity. By doing that, I had to assess how much equity I have in the property and what is the annual cash flow return I receive from it. In this case, our return on equity is only 3.9%. It is quite low. Don't you agree? I believe I can reinvest part of that $200,000 and get better total return. That takes us on option number 2, cash out refi. Whenever we talk about cash out refinance, please allow me to remind you to always make sure the property can sustain on its own. Self-sustaining means a property rental income can cover for all the expenses, including the mortgage payments. So please do not ever over-leverage your investment. I want you to be very successful real estate investor and very successful in real estate investing. And to do so, you must be conservative and protect yourself. With cash out refinance, we will be able to finance 70% of the appraised market value of $270,000. This worked out to be about $198,000 on the new mortgage. We will use that proceed to pay off the existing loan of this house of $69,000 and the $4,000 on the closing costs. This leaves the take-home cash of $115,000. You can use it as a down payment for another cash flow property value of $400,000. If you have 3 or more cash flow properties with the similar equity, you can see how you can grow your real estate to 7-figure real estate portfolio this way. This new loan of $189,000 is a 30-year fixed mortgage with the interest rate of 5%. The new monthly expenses is now about $1,777, which includes the new mortgage payment and all other expenses. This gives us a monthly cash flow of $23 or $276 annually. I know it's small. It is not a lot, but remember, we don't have any money invested in this property anymore. We refinance it twice. This is still an infinity return, and the equity will continue to grow because I bought this property in the right market at the right price. So the rental rate continues growing steadily over the years of holding. However, with this cash out refinance, you have $115,000 to take home and reinvest it. You do not need to pay for taxes or capital gain on this amount that take out. The IRS does not treat this cash out refinance as a taxable event because you have a new debt on your investment. Please confirm this information with your CPA or tax specialist before you do it. You can now use this $115,000 to buy another investment property with 25% down or buy another wholesale property to create an infinity return. Cash out refinance is a great way to expand your real estate portfolio and to continue building your net worth without selling a great property in your real estate portfolio. You should assess your real estate projects every now and then to see if you can cash out refinance or sell them to trade up for bigger projects through the 1031 exchange to avoid the capital gain tax. When you do cash out refinance, traditional financing lenders will require you to take on your income and asset to qualify for it. Do keep this in mind. If you do not have the income but with the good credits, you can do cash out refinance with portfolio lenders, your local regional banks, or credit unions. They will do asset-based income mortgage for you based on the income of the asset that produce. And also, do not over leverage on the equity of your investment property when you do cash out refinance. One thing to keep in mind is only cash out to the amount that the current rental income still be able to cover for all the monthly expenses. Because With a higher loan balance, you will have higher monthly expenses. Run your numbers well and then make a smart investment decisions. The second thing to keep in mind that when you borrow money at this 5% interest rate on a new mortgage, make sure you can invest the money that taking out on the investment that will yield a higher return than the 5%. Let me close out with one of my favorite quotes. Don't wait to buy real estate. Buy real estate and wait, by Will Rogers. Let me know in the comment below if you have done a cash out refinance to scale up your real estate portfolio. How do you scale your real estate portfolio without a cash out refinance? Thank you so much for watching. Let's learn, invest, and make an impact. Ciao!